Well, our featured guest this hour believes the bull run in U.S. stocks is over, and he has also been a vocal critic of the Fed. Joining us now is Jim Rogers, chairman of Beeline Interest. Hi, good morning, Jim. It is great to have you with us.
I am delighted to be here, Betty.
Well, Jim, I wanted to get your first reaction to the jobs data. I mean, much stronger than expected. This is on top of last month, which also came in better than expected. So what's your reaction right now?
Well, first of all, they're fraudulent numbers. The government's making these numbers up. They say that banking and insurance increased employment last year. I don't know anybody in the banking industry, the insurance industry last month that increased employment. And if you look at the household survey method, which is a different method, it doesn't show that employment went up last month. So the government, I don't know why they keep doing it, because they're losing all credibility. And we know that whatever numbers they publish will be revised dramatically next month. So it's a charade. I don't know why they bother. I don't know why anybody bothers. I know you have to report something, but it's a charade.
Well, we do. But, I want to ask you, though, I mean, the jobs report, the fact that it came out better than expected, I mean, doesn't that in some ways throw light on what the Fed just did, cutting interest rates, and cause some confusion in the markets, right?
Causing confusion is an understatement. Here we have the Fed saying that and the government saying the economy is great, low unemployment, economy is growing, GDP was great last quarter. Stock market's near an all-time high, and the Fed cuts interest rates. I mean, what is this? The Fed is supposed to take away the punch bowl when things are great, not when you're not supposed to pour more punch into the punch bowl when things are great. These people are leading us to terrible problems down the line.
Well, describe to us what problems you think they are leading us down the line.
We're already seeing the dollar's collapsing. Commodities are going through the roof, which means inflation is going through the roof. The bond market's not going up. I mean, the bond market doesn't think this is a great thing. Nobody except Mr. Bernanke and I guess his comrades are doing this. But Bernanke loves printing money. His whole career has been devoted to printing money. He recently before he was appointed, wrote an article saying that the mistakes in the past have been when the oil prices go up, the Fed has raised interest rates to prevent inflation. He says, I'm not going to do that. I'm going to cut interest rates to fuel inflation. This man is a nut.
Do you know Bernanke by any chance, Jim?
No, of course not. I don't deal with government employed bureaucrats. That's why he's a government employee. He can get a real job.
That's right. Well, have you stated your opinions to the Fed? I'm just curious, have you stated your opinions to the Fed? What has their reaction been?
First of all, they wouldn't listen to me. No, they're all down there, drinking coffee and talking to each other, patting each other on the back. They got their government jobs. They think this is a good thing for the world. I think it's a terrible thing for the world. I know it's a terrible thing for the world. I know we're all going to regret it a bit. We're already starting to regret it. The dollar's making all-time lows, Betty. That is not good for 300 million Americans. It may be good for a few people on Wall Street, but it's not good for 300 million Americans.
Right. I do want to get to the dollar later in the show, because you have said before that they're basically debasing the U.S. currency. But I want to first get to your outlook on the economy. I mean, you said before, I'm quoted in the press, that you think that we're pretty much in a recession already.
Well, Betty, if you look at, we know that housing is worse than recession. Automobiles worse than recession. The financial community, many parts of it, worse than recession. Caterpillar and Cummins Indians have come out. Caterpillar said it's the worst in 50 years. I'd like to know what's doing so well that the economy is not in recession. If you reported the improper inflation numbers, the government jiggles those numbers too, then the economy would be reported as in an in a recession. I don't know why they care. A recession is not the end of the world. We've had them every 5 or 6 years from the beginning of time. It's not the end of the world. They clean out the system. They're good for the system.
Right. You said before there's nothing wrong with a recession in these cycles.
I don't see anything wrong with it. We've been having it for hundreds of years. We have lots of safety nets in place now that obviously it's not good for somebody to be affected by a recession. We have many safety nets, and the recessions, if you go ahead and let them happen, they clean themselves out, and then we start over again, which is good for the system.
Right. Jim, we've only got about 30 seconds or so, but I want to get your take on the investment banks. I mean, do you think we're addressing the problems enough, the credit problems there?
I am short the investment banks, as you know. I added more not too long ago. There's a lot of phony bookkeeping going on. You should learn the word level 3 accounting, level 3 assets, because you're going to hear a lot about it in the next 6 months.
All right, Jim. And very quickly, you said you're short the investment banks. What else are you short on right now?
Mainly investment banks.
Mainly
and housing. Fannie Mae, I'm short Fannie Mae.
And housing as well. Okay, we'll talk more about that a little bit later in the show. Thanks very much, Jim. Just hang on here.
I'm short Citibank.
Well, Citigroup. Not doing very well. I want to get to you on oil. You just heard Sue Keenan talking about the supply-demand situation as well as inventories. Last time you were on, you said we could get $100, $150, $50 oil. What's your outlook now?
We can get $100 oil or $150 oil. It's going to happen during the course of this bull market. Whether it happens this year or 2011, I don't know, but I know it's going to happen. Oil prices are going to go high because nobody has discovered any gigantic oil fields for over 40 years. I mean, there's just no oil out there. Now, the bears say, oh, there's plenty of oil. I suggest they sell oil then. If there's all this oil out there, why aren't they dumping it on the market? The reason is it's not there.
So you say the lack of reserves out there is the main driving force right now behind oil, not the speculative money that we've heard about.
Well, there is speculative money, but the speculative money is only there because there's an opportunity there. I own oil, but I own oil because I think it's going higher. I don't own it just to speculate. No, the reserves are declining everywhere, nearly everywhere in the world. Every oil company has declining reserves. Nearly every oil country has declining reserves. There's just no oil out there, despite what the bears say.
Are you surprised that we got to $96 a barrel so quickly?
Yes, of course I am. I wouldn't have bought oil, 6 months ago, and it shows what a terrible trader I am. I'm the world's worst short-term trader. I own it. I haven't sold any oil, but I'm surprised it's here this fast.
Okay, Jim, I want to get your outlook very quickly on other commodities. Which one to you looks the most undervalued at this point?
Well, I am buying agriculture at this point. I have been buying. Merrill Lynch has a new product that I've been buying based on agriculture. My agricultural index. I think agriculture is the place to be. There's terrific, positive, fundamental changes taking place in agriculture. The number of acres devoted to wheat farming has been declining for over 30 years. The inventories of food are the lowest they've been since 1972.
Right.
A lot of wonderful things happening in agriculture. Should be buying the commodities.
So, Jim, what is your reaction to what Mr. Lazier just said about jobs?
Well, when you work for the government, you have to say stuff like that, and they all do. And you could get his spiel every month without even getting him on the internet, because you know what he's going to say. It's astonishing to me. Retail sales are slowing down. Every sector of the economy seems to. He said services. I'd like to know what's going on. The dentist doing that well? Which services are doing so well? The hamburger stands? I just don't see it in the economy, and nobody else I know either, except the government keeps saying services are doing better.
Jim, I do want to turn to the financial sector again, because as you were saying earlier, you're shorting investment banks right now in housing as well. Stan O'Neill at Merrill Lynch walking out with a $160 million pay package. What do you say to that?
What's even as bad, Betty, last year he got a bonus of something like $30 or $40 million for last year's earnings. We now know last year's earnings were totally fraudulent. They were just made up, and yet he took a big bonus for that. He's not giving that bonus back now that we know that the numbers are wrong. And to get $160 million for not ruining, but damaging the company? Listen, I'll take credit for it if they give me $80 million. It's crazy what's going on.
So you think that the financial sector is definitely not addressing the problems correctly? You think that those problems are going to continue with us for quite some time?
Betty, listen to the words level 3 accounting or level 3 assets. The accounting profession is now making these guys own up, and next year they're going to have to